All right, Bismillah. Today is Tuesday, December 31st. It's the last video for the year, for the month. Good is good enough, and this year has been about progress, not perfection. In the final video this year, I'm sharing the lessons that shaped my trading, the strategies that worked, and how you can refine your approach for success in the coming year. So let's get started. If you've been following my channel, Trade and Wait, you know I focus on simplicity, discipline, and professional grade trading strategies like fair value gaps, OTE entries, or optimal trade entries, as well as market maker buy or sell models, ideally. This year was about building systems and refining habits. Today, I'll break down the lessons that matter most and how they'll guide us moving forward. So Monday we had moderate news at 9:45 and 10 a.m. And today, Tuesday, we had 9 a.m. Moderate news as well. Not sure if any of those things mattered in terms of the market moving or what is to come next, but we do want to focus on time and price when we are considering price action movements. We also want to consider or factor in traded in the direction of the higher time frame bias. For one, I prefer to use the 4-hour time frame, and especially using that for internal range to external range liquidity sweeps, and vice versa. The 1 hour is good as well, and generally I use that for like a daily bias. 4 hour can give you that weekly bias. The 1 hour can give you that daily bias, which also impacts the types of trades that you can take, or the length of time you can potentially hold the trade for, right? A setup that's identified on a weekly time frame, for example, will take potentially longer to unravel or materialize than it would on a, let's say, a 5-minute chart. Your targets would be much more concise, much more tighter targets potentially, unless you have a higher time frame draw on liquidity. Then you can either potentially reduce your risk for the trade, your percent R, or your just target lower hanging fruits or low hanging fruit objectives. The 15-minute chart for me, the 4-hour and the 15-minute chart kind of go together. They make things for me even more sweeter. One thing to keep in mind is that fair value gaps, especially higher time frame fair value gaps, they don't just serve as potential springboards for price or support resistance, right? True support resistance levels. They can also be targets. They can also turn into, let's say you have a bearish fair value gap. That bearish fair value gap can be violated and turn into an inverted fair value gap. And that will obviously impact what type of trade setups you can take or should take. So from here, I'm going to get into some price action. But first I want to, this channel is not my channel, so I blocked out the name of the channel, and I only restricted it to things I posted. Just want to remind you guys to like, comment, and subscribe. Like, comment, and subscribe. And also the mantra is day by day and in every way, I'm getting better and better. Day by day and in every way, I'm getting better and better. I'm going to say it one more time. Day by day and in every way, I'm getting better and better. That's something you can take with you into the new year, into your tomorrow, because nothing's guaranteed. But It sure beats putting in the effort, right? Living day by day with maximum effort towards reaching your goals and objectives. But yesterday, which was the 30th, at 3:54 p.m., I posted that I was looking for a short position. Instead of 3:53 was the time I took the screenshot. Short position using a bearish fair value gap, and also which confluence with the previous day's low, right? We'll get into that later. And I said may or may not happen due to the time left, right? But this is also a macro, so we were expecting some type of dynamic price action or some increased volatility. So I said the target is that 15-minute inverted fair value gap beneath 50% of the dealing range. That's going to be shown here. That's this. I eyeball the midway consequent encroachment of that. But this is the 50% of the range. So I was anticipating price to at least trade into a PD array, and this is the PD array, a violated bearish fair value gap. So this was the target for yesterday, and you'll see how this inverted fair value gap played out for today's price action, because today was what? An inside day. It was inside the previous day's range. So I said best case scenario, pull back to the order block, the 10-15 hours candle. That would be this candle here, this down close candle, and this is a 15-minute chart. 404, top of the fair value gap was hit. The target was hit. Same levels, and today 8:50 a.m. Same levels from the PM session still in play for now, at least. This is where we were. This is how price action treated that inverted fair value gap. 8:51, setup is present on the 15-minute, but clearer on the 5-minute. I missed the entry. I missed this entry, but you'll see later on that price was pretty much, it was very like jagged, very lethargic price action initially, like very like just stabbing into this imbalance multiple times, even ran down, ran back up. Definitely enough to make you to shake you out of the trade. So you have that real choppy price action, but PD arrays are still being respected. Price is inside that 15-minute inverted fair value gap from yesterday, and OGT stands for one good trade. One good trade. So hope that's clear, and meant to say either way is a completion of a market maker sell model. So let's get into the charts. Let's take that off. All right, so we had this weekly imbalance, inverted fair value gap highlighted for the week. So that gave us our directional bias that we're looking for a move into discount, right? Because we were in premium above 50% of this range. So here price closed here above, inside of a premium range. So there's a premium PD array, and we're looking for a discount PD array. So you can see, so I highlighted this down close candle. That's the one. Technically it's both candles, but highlighted the lowest of the two. If you don't like not readily or comfortable with order blocks, you can just use this bullish fair value gap way over here. Right? You can use that. Doesn't matter, right? Because it's bullish. You can still see price respecting it. So when price potentially gets down here, we want to see, will price respect this PD array, or would it violate both of them? Because in that case, if this gets violated, this is a bearish breaker. Likewise, this is a breaker too, a bearish breaker. All right, and this right here is a 4-hour chart, and we can see we went over this already. You can see last week that price traded inside of this inverted fair value gap here, and we can actually, yeah, it's valid. And you can see how we have a false breakout here. We could have taken the trade here, but prices violating this balanced price range here. Could have taken the trade from here. Once price violated this, you could have taken the trade, targeting here. It's a small fair value gap here, and you can see price reacted to that. And we had a retracement into this small fair value gap. I had someone tell me today that the higher time frame PD arrays or higher time frame fair value gaps that they work, but the lower time frame fair value gaps don't work as much or as often. I respectfully don't agree. I don't agree, but the point I'm making is that yeah, they may not. There's rules to this, right? You can't just see like, are these like these two up close candles, are they fair value gaps? Yeah, but they're gonna get violated, right? Because the target was met right here, right? Running the high. So the objective was met. The higher time frame drawn liquidity was met, was satisfied. So now it's time for what? A lower time frame objective to be met. Right? So we can say here that this is external range liquidity. A swing high was rated. Then we have a break in market structure here. Break in market structure or market structure shift here. And price dropped. And traded into here. Pull back into this imbalance. Right? What's the rules? The rules are you can anticipate price to trade into the imbalance that broke, that created the market structure shift. This is the first fair value gap. But if you entered here, you had to be willing to stomach price trading higher. Right? So that's the rules for this 2022 ICT model. Right? So that's your entry short here. And then the drop. So you say internal range to what? External range liquidity. So we have this small imbalance here, external range, back to internal range, and then where are we going? External range, that's this swing low or this swing low, and back to internal range, right? You can say it rebalanced this fair value gap, or you can say it traded into this 4-hour order block, right? Here it looked like it's suspended in air, but here you have a clear level, right? Or you can just use quadrants of this weekly wick here to potentially have better targeted. But here you can see even today price is respecting this 4-hour order block. from here, I'm going to change that to a 4 hour. I don't know what this is. I think it's I'm going to just drop it down to show on the lower time frames. And then change this one to a 15-minute. And one of the reasons why I'm keeping it like this is so that way we can always keep things into perspective, right? It's important to keep the higher time frame perspective in mind. So if you are going to use the 4 hour as, like, let's say, so this is based off the weekly time frame, but we are using here actively trading, day trading, or short-term trading, using the 4 hour time frame as our higher time frame chart. So you want to keep things into perspective, like where is price going, how would it get there, right? Those types of factors. So here we can actually, one thing we could have done on the weekly time frame was highlight the previous week's close and then see what the opening of this week would have done. And we would have seen that price ran above the previous week's close and then kind of slowly bled out here. I highlighted here, we have a 15-minute bearish breaker as a nested PD array with a balanced price range / the highlighted fair value gap, bearish fair value gap. And what I'm referring to is this fair value gap. And you can see how it's being respected. The question is time and price. It's time and price. We have this higher time frame PD array being respected after it's been violated. It's being respected as an inverted fair value gap. Right? Drop. And this signifies a new week. So let's move this. So let's say we just said this is you can see it, right? It's right. You see it, right? 60.27, which we already kind of got on the chart. 60.27, right? The close is up here. 60.27 is the close of the previous week. So I'm gonna take this black one back off, and we can see this pretty much coincides with this purple line, which is how I calculate the Asia high in this situation, and the Asia low will be here. Let's put that back on so we won't have any. All right, so it's there. Let's make it a little thinner. I just don't like it on the chart, man. It's like making the chart crowded. The 15-minute chart is already crowded right now. So, but whatever. You want to see, let's make it, there we go. Let's just make it big, right? And this is a new week, December 30th. It's the start, which was yesterday. And we see here, Sunday, ran the high. It also couldn't hold the previous week's low, the previous week's close. And we can see here, boom, into this balanced price range. Then you can even get into retail logic and say it retested the previous week's close right here. So that's also, you can look at it visually and see that's an optimal trade entry short. But who's up at this time? Who's willing to trade this consolidation? But the fact that that's a telltale sign for you as well, something to consider if you have a key level and price is consolidating. First off, price consolidated here above the level, then price broke below and then consolidated beneath it. So what do you think it's going to do? That's something for you to journal about, back test and forward test if you're willing to engage with price in that way. But price is consolidating below a key level. That's your opportunity. You can go short. You can go short from here. Or turtle soup, right? turtle soups are risky. Those are high risk, high reward entries. This right here would be a low risk sell, right? Flat out. Here's another opportunity here. It's also an optimal trade entry short. And again, we had the breaker, high, low, higher, high. And you see price is trading inside of this 1, 2, 3, 4 candle range. You don't need all of these things, but if you can spot them, good on you, right? If you can spot them and use it to your advantage, then who's going to fault you for that? Like, is your banker going to tell you, hey man, right? He's going to tell you money talks, and he's not going to check the grammar, unless you did it through like nefarious means or some type of illegal activity. They're not going to like scrutinize you. They're going to tax you, of course, but that's a different entity, right? So here I use here as the high here. So this swing high, and I wrote it out. Protective stop here, 60, 20, 50. 61.8 would be 60, 14. And thinking in terms of R's, what is the difference between your entry price and your stop loss or your protective stop? Right here, we're saying that it's going to be a 6.5, 6.5 point difference between the two. So that's going to get you, right? ES, each tick is 12.5, and each point is $50. So you're risking 50 times 6.5 per one contract for this type of trade. The question is, can you stomach that? Can you risk losing all of that or percentages of that? Now, if I was to put the fibs on here, and as you know, I usually eyeball it, right? Make that bigger for you, because I realize on some of the other videos it's not very clear due to the size. But here you can see you didn't have to take the 61.8. You could have waited for the 70.5 or used the bodies and probably got a different price level than I did. However, 61.8 is still an optimal trade entry. I put here as alternative entry. The best entry would be 70.5. The better entry is 78.6 because it's closer to your protective stop. But if you are like worried, hey, this is the top of the PD array, or the bottom in this case, of this highlighted fair value gap. So you have confluence with the fair value gap entry, balanced price range. If you don't see the balanced price range, you still see the fair value gap. You still see the break in market structure, the break here, and you have the retrace here. Optimal trade entry during the London kill zone, 2 a.m. to 5 a.m. And price gave you multiple opportunities to get in. So here, price didn't move until after the kill zone was over, but the trade is still valid. You would have got in here, you stalked the trade during the kill zone. And this is how it would have I'm about to say unthawed, right? This is how it cooked. This is what happened, right? You got 4 standard deviations. Let's see if it would reach 5. I don't see it here, but yeah, 59.1850. The low of this candle, 59.18.25. So, yeah, 5 standard deviations based on this range. That's what it means, right? So, if we did this, it would be 5 of those. 2, 3, 4, 5. 4. All right, so literally duplicating this. This is the original one. 1, 2, 3, 4, 5, and that's how you get. That's what's meant by standard deviations, right? And I eyeballed that too. So if it's a little off, then do it yourself. You'll get the same results or better results. Or just trust the fibs, right? It's not the fibs. It's not the fibs. It's just it's measuring it for you. Why be extra, right? So we had that optimal trade entry short during the London session, and a continuation into this 4-hour order block that we highlighted here. So what's the opening price of this down close candle? It's 59.26.25, and you can see it right here, 59.26.25. That's this level here, just so you're aware. So this 4-hour order block is what caused price to trade higher. It broke below it. Obviously, the entire candle is the order block. And you can see here that this is one of the reasons why it's beneficial to keep the higher time frame chart up, so you can kind of get a better perspective on what is price doing. Here you can see the bodies are pretty much respecting the order block, but the wicks are violating it. And as ICT says, the bodies tell the story, but the wicks do the damage. So here's your damage, right? Or here's your opportunity to go long here. So what I did here was measure this imbalance, this bearish fair value gap, or sell side imbalance, buy side inefficiency, and I just left the 0.5 there, and there you go. You can see it more clearly here, but I'm going to take that back off. So that's what price did. It traded into this 4-hour imbalance, into this 15-minute consequent encroachment halfway point, and that's pretty, to me, that's pretty accurate. Let's see what the numbers are. Let's see what accuracy doesn't matter, right? Good is good enough, like we said in the beginning of the video. Good is good enough, right? We're not looking for perfection. We're looking to develop a system, to adhere to the process or the processes of the system, and as a direct reflection of our execution, we should be anticipating success in our trading, right? So that's 59.93.25. The high on this candle is 59.93.25. I'm not into the precision, but you can. It's a target. It's a target for a reason. So here we have a trade here, and as I mentioned from the Discord channel, is that we were anticipating yesterday the short here, right? Because of this, because price failed at the consequent encroachment level of this SIBI. Then we have a break in market structure here, break in market structure, and the retracement back into here. So we have another a continuation pattern, and this is also power hour. This is the 2 o'clock. Let me see, 2 o'clock is here on this candle, and I know everyone is looking for a silver bullet setup, and it ran stops here. So which means that this was a market maker sell model on another time frame, not this one, right? Obviously. Let's see if we can capture that. I'm only going to go to the 5 minute, and then from there we go to the 1 minute. But so let's see if we can capture silver bullet. I don't normally trade the 2 to 3. I prefer the power hour 3 to 4. Look for setups between 15:15 and 15:45, and then 15:45 to 1600, or continuation or reversal between 1600 and 16:15. So let's see. We're gonna drop down to a 1 minute and see what we get. Ooh, the pretty colors, right? Where's the trying to dragon, bro? All right, here we go. Oh, matter of fact, I can make my life easy. I could have just, I think I got, nah, is it this one? Oh, here we go. Okay. Here's your 2 o'clock silver bullet. 2 o'clock. So you have, you see, here's your run on stops, run down. It's doing all this prior to 2 o'clock. Here's your completion. Here's your entry, 1406. Your short entry, boom, took out that. That's a complete market maker sell model. That's a run on stops. You see, you ran the buy side. Wait for 2 o'clock, 1406. Here's your entry. All right, so this is a run on stops here too. This is your breaking structure. Here's your fair value gap on the price leg that broke the market structure, and here's your entry. Right, but you was on like the 15-minute. You can't readily see that, and that's okay, right? That's okay, right? Oh, this is a 5-minute, so you still can't see it on the 5, but you can. It's there on the 1 minute. So are you willing to do that? It's up to you. So this would be your entry. Probably, let's be realistic, probably would enter on the bottom of the fair value gap and targeting that low here. You want to see how many points is that. So that's going to be your 10 that's going to be your 10 right there, right? But that's also an optimal trade entry short. I'm definitely going too deep, right? I didn't mean to go this deep, but if I'm providing any value, then please like, comment, or subscribe. I'm having fun, so it doesn't really matter. You know what I mean? So I'm not going way over here, but obviously you could have. Anyway, that's a different setup over here because it's a whole different ball game over here. So we still inside this 1400 hour silver bullet, right? And there's a swing high. Here's your swing low. Here's your optimal trade entry short. And we can, I don't put them all on 70.5, but if that's your entry model, 70.5 only, you're going to miss some trades, but you're going to have a better risk to reward ratio. That's on you. 61.8 will kind of get you like the surety that you can get into the trade. However, you may take more drawdown. So this is your optimal trade entry, and your target of 62. Make that a little bit bigger so you can see it in the back. It's too big though, but whatever. All right, so that's target number 2. Target number 2 is achieved. That's good money. That's good. All right, we're gonna go back on task, right? It's like, do we need? All right, so that's so we had the 4 hour. Let's take this noise off. So here we go here on the 15-minute time frame, and that's what it is. 15-minute time frame. Where were we? I lost my train of thought doing too much. That's how it is. But is that hard? It is a little complicated, right? But if you stick to your routine, stick to your strategy, and not overdo it, right? Right? Keep it super simple, or keep it simple, stupid, right? So here we go into here. This is a 15-minute imbalance, and here's your short entry. You can either, like, if you use order blocks, then you can use this, and you see price traded into that, and then drop, and then it pull back. So you have multiple opportunities to even go short here yesterday, and this would be your 15-minute inverted fair value gap that was violated. I could probably take the time out to draw it better, but so make that gray like I do, and just shoot it across because it was relevant for the day, because you can see, right, the high is way up here, and so that's that same. And throughout this channel here, I frequently go back to PD arrays that were like, that showed that proved there was key support and resistance before, right? It's like this level, it is what it is. It's a bearish imbalance. It failed. Why? The higher time frame objective was met, 4 hours. So now what, right? Or lower time frame PD arrays is subordinate to higher time frame PD arrays. So which one is stronger? That 4 hour. That 4 hours stronger. 4 hour PD array stronger. So let's bulldoze through this 15-minute bearish imbalance. So what that made that an inverted fair value gap. Just straight up disrespected it. All right, so that makes it now strong. It's what? Inverted fair value gaps signifies what? A change in the state of delivery. A change in the state of delivery. What does order blocks do? Order blocks also signifies a change in the state of delivery, meaning that if price was going or booking lower or bearish, that order block should hold price higher, right? Like here, like it was going down into it, price went down into it, pushed price higher. It didn't take it to the moon, but it took it up. That's good enough. It's good enough. If you want to, all right, I'm going too far. Get excited and I just start talking, just yapping. So what is this now? So bearish order block. It's a high, low, higher, high. What's the order block? What's the breaker? Did I say order block? It's a violator order block, which makes it you can call it what you want to call it, right? It's a mitigation block. It's a mitigation block, which is also an order block, which is also a breaker block. Right? So high, low, higher, high. The down close candles would be your order block. And for the sake of being extra, because I can be extra, I'm a very technical person, so I accept it. Let's see what that high is. One tick away. That's pretty good. Pretty go short there. Yeah, where's this at? Okay, that's that. It coincides pretty much with this, with that. So it's a good, nice confluence there. Where we at with it? All right, so this is what we have here. This is what we highlighted in the Discord. Short into this inverted 15-minute inverted fair value gap. It actually held consequent encroachment, pulled up. Technically, this is a break in market structure here. You have the Asia session, which is characterized by what? Accumulation. So we have accumulation, manipulation, and then distribution. Back at this 4-hour order block, which again, the bodies are respecting it, but the wicks are doing the damage. So, where were we? Okay. So this was the optimal trade entry. You just had to weather the storm. So again, the kill zone for London 2 to 5. I don't know. Okay. So there's your low, there's your swing low, there's your swing high after the break in market structure here. You have to realize also this is a game of probability. So even if you get it wrong, but you followed your plan, you kind of got it right, because you would have protected. This would have been where your stop order was. Put 10. Take off that. Make it more readable. Okay, so you see optimal trade entry 130. Okay, it's not the kill zone, so let's not do it. You can do it though, but it's up to you. Kill zone. Let's see. Let's see. I'll put 2 to 7. Don't judge me. Don't judge me, man. Anyway, 2 to 7. All right, so here's your entry. Enter here, into here, whatever. And here's your model. Let's move that to the center, see if that does better for. Okay, so target 1 didn't reach 2 standard deviations because we had this fair value gap there, which is obviously this was a draw on liquidity. All right, so we had price retrace back down into the previous week's low and also into the Asia high. Then it just went crazy. Anyway, let's take that back off. Okay. All right, so I don't know. I'm not counting how many entries and trades. London kill zone traded into here. Here's your swing high. You could have treated that as a ceiling. This is your turtle soup entry. It's also an optimal trade entry short if you utilize the current range that price was in. So that's the end of that long, but you have to always consider where is price at, what range is price currently trading in, and what is the overall range that price is trading in. There's a lot of ranges. It's just like that, what's that doll called? I don't know I always forget the name of the doll, but I think I got it on. Should still have it on here. Oh, these dolls. It's the same. Like, come on, man. Anyway, don't. Right? So is this high to this low? Because that's the range. That's where price is currently trading in, right? We got the optimal trade entry long. Now we have an optimal trade entry short, 78 point. Time frame is this? 15 minute. Just make it 10 so you can see it. All right, there's your short entry. So that's one model. That's like two models in one. So here's your continuation pattern here. Or let's say you don't like that. You don't like that. You don't have to take that. But also we're gonna see there's target one. It's hit 0.5 standard deviations. It's hit today. It's good money, right? It's good risk to reward ratio. Even if you use 61.8, you took some drawdown, so here you wouldn't have done that because look at this big bull bar. Price is still pushing. It's not showing any signs of exhaustion, right? Until you get here, consolidated, upward consolidation, bear flag, if you wanted to call that. And you into that, you can do this and see that price broke the trend. And then retest. That's your also another optimal trade entry. Take that off because that's noise. But there's your swing low to this. It's your swing high to this swing low. Here's your optimal trade entry. Again, let's put the numbers. Let's give you the full package, right? I think I showed you guys all the numbers. I'm not going to keep making it bigger because you could pause it and then it's all scattered around because you in the kitchen. I don't even use these. It's just like whatever. Doesn't matter. In the kitchen, so it's not that neat and organized in there, but you can see what's turned on versus what's turned off. So that's that swing high. And that's this swing low. And we had the moderate news here, making price go crazy. And again, what's the phrase? The bodies tell the story and the wicks do the damage. Look at that. Price is respecting this 15-minute fair value gap and offering you a very great risk to reward ratio. If you can sit on your hands and wait, right? And you have to respect your stop until you feel like price reach. Like, so here's this equilibrium of this price range, this price range. That's equilibrium. That's the halfway point. Let me confirm that. Let me confirm. Yep, that's the low, that's the high, and that's the midway point. Turn it back off. All right, so what we're looking for? Look at all these relative equal lows down here. Sell side liquidity is just screaming down here. All right, so obviously you're looking for price to trade below 50% of the range into a PD array. And in this case, we have this one that has been standing the test of time. However, it stabbed down here. Yeah, you probably would have got like, okay, it's below 50%. Price is reacting, but it's also holding below this consolidation, which is just a breaker. The whole high, low, higher high, or you saw it here. High, low, higher high, whatever the case is. Whatever works. And you can see price drop downward force, and it just dropped back down into this 4-hour fair value gap. It's time for me to go to sleep, man. Into this 4-hour order block, which price traded between these two PD arrays and just bounced around until, right? So I was explaining to a brother of mine that I don't do well in ranges, like these tight ranges, but another friend of mine, Charles, he does well in ranges. He loves ranges. And I kind of envy him that you can actually, I can see it, but my impulse is like, man, wait for the bigger move. And that'll get me in trouble every day, right? Gotta get me in trouble. It's good money though. This is a sizable run, right? It's pretty decent. This is a 15-minute chart though. It's pretty good if you can trade this range. But one thing that I saw, and then I'm gonna get out of here, is I was looking at my favorite zone would be, I'm gonna go to the 15-minute over here and the 1 minute over here. And because we had this 15-minute, it's no longer a bearish fair value gap, by the way. I mean, it's no longer an inverted fair value gap, it's a bearish fair value gap. Again, it's a reclaimed bearish fair value gap. It's a bearish fair value gap that was violated. Price came back through and violated it again. It turned it back into itself. Like, you thought you was trans, and now you went back the other way. Yeah, I said it. Sorry. I mean, I don't even say sorry. It doesn't even have a meaning to me. If I say sorry, it doesn't mean anything. If I apologize, it means a whole lot. So I apologize. It didn't mean to offend, but it is what it is. So here again, time and price theory, and we're looking at which one are 15? Let's do these two. Let's show. Oh, that's ugly, bro. Ugly. All right. Well, that's better. And then we have 1545 to 1615. We could just change that to 1600 because you can see it's a whole different vibe after 1600. 1600 to 1615 is another macro, right? Like another vibe. All right. So anyway, I thought so we had that run up here. So this is your 1500 hour silver bullet, or your completion of a buy model. You can see it 1, 2, 3 drop. This is your break and market structure, and then here at 1549 we have a short opportunity below this balanced price range here. Let's turn off that extended. All right, it's almost over. All right, so we have this break and market structure. We have a run on stops. Traded back is respecting this, but it's a 1 minute chart. I mean, if you may not be playing down here, then don't play down here. Honestly, I mean, looking at this, you'll go, okay, how can I trade this? You know, I would want to avoid it because I don't do well in ranges, but treating the 15 minute as a high time frame, then the 1 minute time frame would be okay. The 15 minute is in the range, but you can argue on the 1 minute. These are trends. This is an uptrend. This is one leg pull back 2. Let's see what that looks like in terms of a measured move. 1 pull back 2. Perfect. Oh, I mean, you know, that's close enough. You can say what you want. You can say what you want. That's a perfect measured move. It's the same 25 points. 25. You playing. right? So that's one leg, pull back, two leg, measure, move, objective, reach. Then you got your break and market structure. Here again. One, not sure you want to measure from here or measure it to here. Let's just do that. Let's just change this color to, and then we got to pull back. Pull back. Again, you got another measured move pretty much. And that's 19 points. So it's tradable. Is this a range? Yes. 15 minute. Is this still in the range, but it's more like, it looks more logical, more sensible to me. But obviously, if you don't play down here in 1 minute, then don't start unless you prepared for it. But that's also your optimal trade entry. Hopefully, so 61.8 entry short into 62. Let me put all the noise on here for you. It's not noise, but all the words. Second target, it's reach, optimal trade entry, and this last, and then that's back into this order block. It's order block. So again, it's a lot been covered here. Measured moves, one leg pull back two, or A, B, C, D. You see here, and during the 2 o'clock, again, you can also, it's also like you're trading candles, hourly candles too. You're looking at it 1400 to 1500 to 2 to 3 o'clock. This is the high of that candle. Well, not even. High's over here. Well, actually, it's right here. All right, the high and the low here. So what you got? A run on stops. You got price running back up. You have a break and market structure here. So you got a run on sell side liquidity. You have a break and market structure, either using here or here, doesn't matter, right? You got that break. You got to pull back into the imbalance right here to push you higher on this at this stage, and that's still in the 2 o'clock candle. We not even factoring this run up in the equation. We really talking about this one. Let's change that. So we have another break and market structure here, right? So we have this 1500 hour. This is, we thinking in terms of a hourly candle. So we have 1500 hour candle run the 1400 hour candle high. Then it pulls back into that candle's range for an optimal trade entry, right? Because you ran stops, got a break and market structure, a pull back into an imbalance. Here you go. Inverted fair value gap here. Bomb, or here, but ideally here. And here's your optimal trade entry, 61.8. Target in 20.27, which is target one. So that's like trading that candle. So that's back into this 15-minute inverted 15-minute reclaim fair value gap. And then you have another short opportunity. Trading back into the range, back down into the inverted fair value gap we pointed out here. Bam, right? And inverted fair value gaps are, I just turned them gray. And we can see it, right? And again, it's been respected here. It's violated, respected, pulled up, pull back down, respected, pull back up. And I'm not sure we have Not too sure if that's like, hey man, one of those moments. Well, let's find out. Come on, son. Come on. Come on, man. That's a 1 minute. All right, anyway. It's we get money. We did what it do. It's a whole hour. Apologies for keeping you. I had fun. I don't know if you did, but if you found value in this video, please like, comment, subscribe. And the main focus here was that time and price, discount to premium, internal range to external range, and vice versa. Higher time frame draw on liquidity. Rather, that's the weekly, the 4 hour, 15 minute, whatever time frame you deem fit. And identifying, again, discount to premium. Also identifying if price is currently trading in the range. Also identifying potential key support and resistance or inflection points. Remember to journal your wins, your losses. Rather you're not trading or not, live, journal. Still do your book of charts. This right here for me counts as my playbooking, counts as my book of charts because it's recorded. And in general, it's kind of, I guess it's kind of sloppy. Like monetizing this is not my focus or whatever. It's really just building up that consistency of developing a habit and following the plan. That's just me. Anyways, remember, man, day by day and in every way, we are collectively getting better and better. Good is good enough sometimes. You don't have to be perfect. Precision is not necessary. It's cute, right? It's cute when everything adds up, but when I first started, man, the OTE entries, and I'm like, yo, this is too easy. Can't be, because you hear all the stories. This can't be too easy. It can't be this easy, man. But really, the hardest part of trading is you. It's you. You're the weakest link, man. And I don't mean to say like you're the weakest link, like you can't do better or you can't reach your objectives, but you're the weakest link. You're gonna sabotage yourself. So you got to develop rules. Like you got to become like AI, right? You got to become that guy, like that girl, that guy. That's like, yeah, I'm here, but I'm like tapping in, like that avatar Aang mode, like, you know what I mean? Just lock in, show up and show out, But yeah. Whatever, you can play around with that if you want. What am I doing here? All right, man. Like, comment, subscribe. And honestly, the Instagram page is not really, I think it's like one post there. Let me see what I can do with that. But anyway, like, comment, subscribe on this YouTube channel. Comment below if you guys are willing, like somebody's like legit willing to like be solid, be real, like, and want to show up. We can work together. We can build, right? Each one teach one. Yeah, enjoy.